Hopefully YouTube works. And there's about a 10-second delay. Sweet. Perfect. So we've got that. Hey everybody, Derrick Sanderson here, Keller Williams Realty in Chico, California. I've got my buddy AJ here from Summit Funding. He's a local lender, and we were going to be streaming this live on Facebook, but we've been having some issues with Facebook Live. So you can check out on my page on Facebook. I actually just posted, we are live on YouTube. It is also in the comments in the actual event here in just a second. So thank you to everybody who is tuning in, and this will be posted a little bit later for you as well. So welcome, AJ.
Hi.
Great to have you.
Thank you for having me.
So like I said, AJ's a local lender. You know, there's been a lot of uncertainty going on here, AJ, with COVID-19 and all the processes going on with that. So thanks for taking a little bit of time just for me to be able to ask you a few questions. So I know We've had some historically low interest rates as of lately, and there's been a big rush on refinances and even people trying to lock in those rates. Tell me, how is COVID-19, how is all this affecting interest rates right now?
Yeah, great question. So just like you said, interest rates are great. And we saw, it's been a few weeks now, I think almost about a month ago, we saw rates, drop down to historically low rates. And that was this big refinance push, and a lot of people jumped in on it. And then it actually shifted really, really fast. About a week later, I swear rates had jumped up like at some points 2% on products. And so it was pretty crazy. And now that's come back down. The Fed said they would buy I believe it was about $1 billion worth of bonds. And that really helped the market kind of stabilize. Now, for the past almost 2 weeks now, we've seen very little movement in the bond market. And so that's been big for interest rates and keeping them low. And we see that kind of continuing. Of course, at any point, some kind of report could come out and change that. And that's kind of the uncertainty in this market. I mean, a lot of what we hear and say is, hey, if you have the chance to kind of jump now and jump on these great rates, the chances that you will get this at another time are slimmer. So, but we do think that they will stick around for a little while, but, sooner the better to capture that.
Okay, perfect. So it sounds like you said you're kind of expecting the rates to stay low. I know that your crystal ball is broken, much like mine with the real estate market, but it sounds like that will probably they'll stay pretty low.
Yeah, we've seen the stabilization in the market here for it's been almost 2 weeks. We haven't seen a lot of movement. So, I think as long as the COVID-19 and the things going on with the economy and things like that, that will usually, keep them kind of low. But like I said, they should have been low before they jumped up. And they jumped up crazy. So at any time, things can kind of change and shift. So, but we do, kind of what we read and hear from experts that deal with this daily. They think it will kind of stabilize for the next, few months or so.
Okay, perfect. So people might not be aware, in the lending process, there's what's called a rate lock. You're able to lock a rate in. So have you seen any changes in that policy, at least with Summit Funding? I know you can really only speak to the company you work with. Have you guys seen a change in that policy? How far out can you lock in those rates for borrowers right now?
Yeah, great question. From company to company, there are different standards, and Summit's no different for that. So we try to do our best to, really be at the forefront and accommodate, make things as best as possible for borrowers. But we also do have to protect ourselves in some ways. On purchases, really nothing's too different. We most of the standard locking periods are 30 to 60 days, and it's still the same. You can lock longer. There are different programs and costs associated with that. That's usually for you're looking for like a new construction or something like that, and it's definitely a conversation that we'll have. But the refinances is kind of where the change has been made, and we've seen it from other companies doing kind of the same thing. Just with our company right now with refinances, you have to get your loan going. You have to get into underwriting and get at least initial loan approval and have the appraisal back before you can lock in your interest rate. That usually takes about 2 weeks to do that. And that's a little bit different. Normally we would lock, usually right off the get-go, get your rate secure. And the reason being that is there's a lot of time that goes on with appraisals and escrow going on. And so it just protects us a little bit from holding on these rates for a really long period of time. Now we do offer a benefit for that. The rate gets a little bit better if you can lock for it used to be 15. They just changed it actually to a 21-day period. And there's a pricing improvement. So if we can get our loan finalized, get through underwriting and everything like that, we can lock for 21 days and get a better rate for that. So the benefit can actually be better by waiting to lock and locking for this 21-day period towards the end. So it is a little bit different times, and we can talk about how that looks like, but still a lot of good things going on.
Yeah. Okay. Perfect. Yeah. I mean, it totally makes sense. As lenders, you guys need to be able to watch out for yourselves as well. And I know that things can be a little more risky, especially with not knowing where employment is for people, which kind of leads me to my next question. I know that you will do employment verification as far as the loan process. I mean, you obviously want to make sure people have a paycheck. What does that look like right now with people being laid off and furloughed and just so much uncertainty with the job market?
Yeah, this is one of the biggest changes and the changes that are evolving. And Fannie and Freddie have been saying things about it and have implemented some things that we are supposed to follow, and some it has, and has, as well as added their own kind of layer of protection as well. So the biggest thing is, before normally a normal loan process, you would get a verification of employment, simple form that we send to, HR, payroll that they fill out. And then at the day, usually a few days before you're going to fund the loan, the funder or someone from, corporate office will call and just verify that you're still working. And that was a very simple process. Well, they've kind of made that just a little bit more in depth. And so that final phone call is a little bit more in depth in the sense, like, they'll ask, have your hours changed for the past 30 days? Essentially, has COVID-19 had an impact on your, income in the last 30 days? And obviously, are you still working and things like that? So some things have changed, and that is the biggest thing. Now, one of the other big things, that's just for W-2 employees, salary employees, is self-employed borrowers. And so that's kind of the bigger change, because we're seeing, self-employed's always been a little bit tough because you follow your tax returns, from the previous years, and not so much what you're doing in this current year. And so you have to sign what's called an affidavit for essentially saying, like, hey, my business is still operational, my income has not changed, and you sign that form. As well as that, they're going to do their research. So they're going to look you up on Google, other resources to see, are you still open? I mean, if your Facebook page and Google page says you're closed, that's not going to help you use that income. So some things there. And then they've started to take even steps further than that and verify your income on your bank statements. So, for example, let's say your average income is $10,000 a month from your self-employed. If for the month of March you only had $7,000 in deposits from your business, that could actually that's a declining income. That's less income than what you had showed, and so your business could be impacted and could stop us from funding the loan. So we
Okay.
will do everything we can to try to battle for that and come up with solutions. But it is a big thing, and we do, definitely dot the i's and cross the t's a little bit more now.
Yeah. No, I mean, that definitely makes sense. And I mean, I even know after the last housing crisis, which this crisis is nothing like that. Um, I know that a lot of things were put in place that forced lenders to already be a little more strict. So, I mean, it makes sense. I can understand it being very frustrating for borrowers, and even those selling their home. I know of quite a few contracts that have actually fallen out because the buyer was pre-approved, everything was good to go, and COVID-19 comes along, and lenders are a little more meticulous and a little more fine-tooth comb there at the end, and they've actually had to cancel escrow. So yeah, it's definitely something. uh, so I know during the process, there's usually an appraisal ordered, and that's usually a third party. Just as a foundation, if you could just briefly explain, why is it that a lender requires an appraisal of the property?
Yeah, so appraisals are important. A lot of people kind of get them confused with like telling them like maybe what's wrong with the house, or different type of electrical work or plumbing, and that's not what an appraisal is for. Usually, you guys will do a whole house inspection that will kind of do those kind of details. The appraisal is essentially for us, to make sure that you're essentially buying this at a fair price. They're going to use comparables, also known as comps, of houses that are similar in nature that have sold within a usually 6-month period, and that supports the price that you're paying. But want to make sure that you're not overpaying, or I guess severely underpaying for a house either. So, but the other big thing is to make sure that it's safe and habitable. So you're essentially buying a house that is a lendable condition and has the value that's supported. And usually when it comes to like safe and habitable is more like a lot of people think like cosmetic things. Cosmetic things are like some paint issues, or maybe it's ugly flooring, maybe even the flooring is really bad and needs to be replaced. But as long as it's like safe, if there is flooring, I mean, if it's missing flooring or tripping hazards, or broken windows, leaking roofs, things like that, that's where the problems lie. And that's we don't see that a whole lot, and usually you'll know that ahead of time, and it's something you kind of talk with me and we kind of address it ahead of time. Most of the time it is not usually too big of a deal.
Okay. So with that being said, an appraisal being something that's required, because it sounds like, because the lender, again, one wants to make sure that whoever the borrower is not paying too much for the house, but also the bank wants to know that what they're borrowing on is actually worth it. So in the event they have to foreclose or recoup any of that money, they know that they'll get that value. So are you seeing any issues with getting appraisals with COVID-19? I know with social distancing and sheltering in place, what is that looking like? Is it taking a lot longer to get an appraisal? Are appraisers even doing appraisals? What does that look like currently in our area?
Yes. So there has been a couple changes. The turn times, the times that it takes to get an appraisal has been extended a little bit. Actually not too crazy, as much as I thought it would be. But they've slowed down just a little bit, but nothing too bad. For the most part, I have seen most appraisers continuing to do their work. I haven't really seen any on our panel that have decided not to be working. Obviously, we're an essential business, so that allows them to work, and things like that. Now, some of the things that we've seen are obviously the fear of having someone come into their house, an outsider. And so Fannie Mae and Freddie Mac actually, said that they would allow for exterior only appraisals. Now, this is something that's kind of like
Wow.
this is like a last resort kind of thing. And it's something that we actually have to run by our appraisal department, and we have to have a lot of explanation of essentially why. And so if you have, a reason like, your house has got at-risk people and you're concerned or something like that, that's something we would look into. Me personally, I have not had an exterior only appraisal yet, but I have a few people in our office that have had one. So it is an option. So
Okay.
rest assured, it's something we can look into. If that's the
Okay.
only reason that's holding you back is having, an appraiser in your house, then it's something we can look at.
Okay. Perfect. So by and large, even though there have been some things that have changed, it sounds like there aren't too big of issues right now with timing and turnaround for that appraisal. Maybe a little
Correct.
bit, but it hasn't drastically affected the
Mm.
process. Perfect. So what, if any, have there been any changes? I know there's a lot of options out there for borrowers and a lot of different programs. Just real brief, we don't have to deep dive right now. Have there been changes to any loan programs? And if so, maybe highlight a couple of the big ones, maybe more specific to the types of loans we see in our area or programs that we see a lot of buyers in this area utilizing.
Yeah, and this is a big change that's going on, and this is something that I've already seen that's varying quite a bit from company to company. So it's something that, like, maybe someone isn't doing it, maybe someone is, and it might be, someone you have to call around and, you know, eh, your agent and Derrick, we know different lenders and we can try to point you in the right direction. If it's something we can do, maybe someone can. We all want to help you achieve,
Yeah.
home ownership. But there are some different things. So, for example, with Summit right now, we're not doing bond programs, which is your down payment assistance programs. They are just on hold. Now they are still going on, but just with us, they're on hold. And as well as construction programs. Now, I have heard that it may be an exception process. So it's something I would say, hey, start with me and we'll see what we can do. And obviously, if not, we'll get you in the right direction. Now, there are other things that have changed. Biggest things are the credit scores for FHA, VA, and USDA. Used to be you could go down to 550 for FHA, 550 with us for VA as well. That has kind of changed. So now it's 620, and it's actually at 620 you have a few overlays that we have, and then it's 640. So there are some changes there, and we've heard that FHA themselves actually might be making some changes to themselves. But right now, this is what we have set up, and it's just different investors and protecting ourselves in different ways, and that's why that's there. And this is evolving. I feel like every day there's something different going on with guidelines and different loans. And so it's something that it's important to if you're pre-approved and you're out there shopping, it's important to just check in with your lender. If they should be checking in with you, but it's important to check in with them and just make sure that, things are the same for you and there hasn't been any big changes. So.
Okay. So kind of one of the last questions. So we've kind of earlier we talked about turnaround time with appraisals. There's also the turnaround of the entire loan process. I know that as a realtor, we've been encouraged to write offers for 45 days close instead of 30 to give a little bit of extra wiggle room on our side because of inspections and all sorts of things. What are you seeing as far as turnarounds and the ability to close and fund a loan? Are you seeing with underwriting and those types of things, are you seeing those getting pushed back at all just because, being a little more picky and the file review process, or are you still seeing things close on a fairly normal kind of 30-day process right now?
Yeah,
and I know that's
absolutely.
going to vary loan to loan. I mean, I know USDA, things like that take longer. FHA can take a little bit longer. So just in general, what are you kind of seeing for those turnaround times?
Yeah, so 45 days is always a great rule of thumb. We usually say like do 45 days or sooner, just so you don't have to stress about it. But we are closing loans in 30 days, and actually sooner. I have a purchase that'll probably close at 27 days. there is that still possibility. Now, there are things that are a little bit out of our control. Obviously, the appraisal and things with escrow. For example, the preliminary report, which is kind of the summary of the property that you get from escrow. We've seen those take up to 2 weeks to get, and sometimes those are a lot sooner. And so we can do a lot of the initial stuff without it. But there are some things that are out of our control, and so it is good to have the the extra time, but it's not always necessary. And we as Summit, we've always been this way. We always put a preference on purchases. We understand that's a big part of our business, and we want to protect it. And so purchases always have high priority, and we have continued to keep our underwriting turn times very, very short. It's usually 1 day, and on the occasional 2 days in underwriting for purchases. And so with having that in place, it still continues, allows us to continue to do things quickly. But like I said, there are some things that are a little bit out of our control, but we haven't seen too many issues from that.
Okay, perfect. So if there's, I'm going to throw you a little curveball, but it's an underhand curveball. If there's one thing that one piece of advice that you would give somebody who's looking to start the process now of buying a house, where would you suggest they start? What would be your one piece of advice, especially with everything that's going on?
Yeah. So you got to start with a lender, start with the pre-approval process. Now, you don't have to meet with a lender, and we can do a FaceTime call just like this. If you want to see this beautiful Golden Gate Bridge behind me, we can do the phone call, do text message, email. We don't have to do anything in person, and you can get pre-approved, see what your options are, and be ready to go if the perfect home comes available for you. There's no big changes to that with COVID-19 and what's going on. So nothing big there. And even if you're looking at 6 months or waiting for this to be over, just it's worth the phone call now. So, because there's some advice we can give you that can help you be in a better spot in 6 months. And so, and it's a free service to have a conversation with me or essentially anyone else. But there's going to like now buying, there's different things. My rule of thumb is like these interest rates are great, and if you're able to capitalize on them, that puts you in a better spot. You pay lower interest, have a lower payment, which everyone loves. And now you're kind of seeing, the I don't know if it's shifting, and obviously this is your area of expertise, but there are not as many buyers out there, so that gives you the opportunity to maybe as a buyer get something for terms that you're comfortable with, or not have to battle with 10, 15 other people that you've seen maybe in the past. But that's something you can speak for. But yeah, I honestly believe as long as you're not in it for the short term, looking to buy and sell in 6 months, a year, 2 years, and you're looking to stay there for a little while, if you're able to get on a house and get these rates, I honestly believe you're going to be in a great position in the future.
Oh, great. Hey, thanks, AJ, for taking a little bit of time. Just did want to throw out there for anybody that's looking to buy a home, or you have more questions. I know AJ's always available, can get you his information. I'm always available. We've both really transitioned our business to being able to be virtual. The shelter in place is something that we take seriously, and we want to protect our clients. That's ultimately our goal, not just your financial health, but your actual physical health, your emotional well-being. And so we want to do what we can to help people. And with that in mind, actually created just before this, got a first-time homebuyer guide, or if it's been a while since you've bought a house, maybe you've lived in your house for a while, we've got that available. That's free. Also, AJ and I host a free class once or twice a month, just helping homebuyers ask questions, kind of figure out the process of where to start. So we'll be hosting another one of those the end of this month. You can check out our pages on Facebook for more details on that. We'll be launching that again here very soon. And again, same format. We have interaction face to face. So thanks so much, AJ, again, for taking some time. I'll make sure that we get your information posted so people can reach out to you and try to enjoy the sunshine. And
You
stay
too.
safe.
Yes, you too. And everyone else, stay
Perfect.
well.
Thanks, AJ.
Bye.